Welcome back to this Money Control live stream. You're watching Closing Bell with me, Nandita Khemka.
And I'm Yatin Mota.
Well, Yatin is all smiles given the fact that we staged such a smart recovery in the last half an hour of the trade, given the fact that the Nifty was below that 18,600 mark for the larger part of the session. But towards the end of the day, we managed to reclaim that level, in fact, end above that 18,600 mark. It was the strength in the auto as well as the realty pack that managed to offset the weakness in the IT pack. If you look at the Nifty gainers, you had the likes of Ultratech Cement, Divi's Lab, Axis Bank, Maruti, Tata Motors. In fact, the Tata Motors continues to hit fresh 52-week highs, and that is something that offset the weakness that we saw in the IT pack throughout the better part of the day. In fact, the Nifty IT index was down somewhere around 2.5% at one point in time, but it ended the day below, in fact, cutting off some of those losses and ending lower by about 1.7% or thereabouts. But if you look at the Nifty losers, the top 4 losers were from the IT pack. So Tech Mahindra, Infosys, TCS as well as Wipro were some of the losers on the Nifty as we end trade. But Yatin, anything on the mid-cap front, given the fact that mid-cap IT was also underperforming today, the likes of Cyient and Coforge, those stocks on the back of the guidance cut coming in from EPAM.
Clearly, and if you look at the mid-cap IT pack, it was the most impacted in trade today. In fact, Persistent Systems, Cyient, Coforge, all of these small-cap and mid-cap IT stocks were down anywhere between 4 to 5%. On the flip side, we have the likes of Aegis Chemicals. That stock was up nearly 9%. SW Solar and Rustomjee Real Estate. These are the two stocks which moved nearly 7 to 8%. And in general, today was a very good day of trade for the mid caps. In fact, stocks like Mahindra CIE, Suzlon, Mazagon Dock, HCL, BDL, primarily the defense pack, if I may put it so, also did well. In fact, HCL, BDL as well as Mazagon Dock, these large cap defense stocks were up nearly 4%.
Right, private banks also deserve mention given the fact that we have the RBI policy this week. So a lot of strength coming in on Axis Bank, Kotak Bank and the likes. And the Nifty mid-cap index, I think it gained for somewhere around 12 sessions, 12 straight sessions, and it has been hitting fresh highs consistently. So even the Nifty mid and small cap end of the market managed to stage a very smart rebound and ended the day with gains. But on that note, let's take a look at some of the stocks that are on our radar this afternoon. Well, starting with, of course, the IT stocks, given the fact that global IT player EPAM has cut its guidance for the coming quarter as well as the full year. And this guidance cut has come in the mid-quarter update. So this is the second time that EPAM has in fact cut its guidance. It expects its revenue guidance, CC revenue guidance to kind of decline by somewhere around 0.5% or thereabouts for the full year, for the calendar year. And as I mentioned, second time guidance cut. So this did come as a very negative news for the entire IT pack, given the fact that we had already seen very weak quarter coming in for some of these large cap IT names like TCS, Infosys as well as Wipro. So this is a grim reminder of the kind of quarters that lay ahead for some of these companies. Kotak Institutional has also said that Q4 was weak for large cap IT companies, but Q1 will be even worse. Given the kind of slowdown that these IT firms have been witnessing when it comes to consumer spends, the consumer discretionary spends, as well as the basically clients also turning more cautious. In fact, EPAM in its con call has said that clients have become even more cautious with spending, and that the caution on spending is in the build segment of the global IT services market, and pipeline conversions are occurring at a very slow pace. In fact, they have also seen a reduction in pipeline. So this is something that has come as a very negative set of news flow for some of these IT companies, and not just Indian large cap IT, but even mid cap IT companies will not be spared. Kotak Institutional Equities in fact believes that these domestic companies are not immune to the kind of outlook that these global IT companies are giving, and the slowdown in client spends and discretionary spending will only have negative impact for some of these IT companies. When I have spoken to some of these analysts over the last few days, most of them are divided. Some of them have turned underweight on IT stocks, but some of them believe that there is a leg for more downside. And given the kind of valuation some of these IT companies are trading, it could be a good entry point at that juncture, but of course for the long term, because coming few quarters may turn out to be pretty rough when it comes to some of these IT companies.
And I think there is some concern on the street with regards to how really does the first quarter earnings come for IT stocks. In fact, Kotak does believe that Q1 will be worse than Q4. So let's see how really IT companies sail this particular tide of global slowdown as well as cut in IT spending. But from IT moving to pharma, which is again a defensive sector, wherein we have some green shoots coming in. Today, CNBC TV 18 reported that Ipca Laboratories Ratlam plant has seen a US FDA inspection start yesterday. So, from Monday, US FDA inspectors have been re-inspecting this Ratlam plant. Now, if you remember, Ratlam plant has been in focus since 2015. The plant is facing import alert from the US FDA after an inspection somewhere in the middle of 2014. So, technically 9-10 years of difficult period for this plant, and finally we have a re-inspection, and if any positive outcome comes in from this inspection, this could mean clearance for its Ratlam unit. Now, why is Ratlam unit quite important for Ipca Laboratories is that the ANDA filings or the product approvals for which raw material which is APIs that are manufactured at Ratlam. So, for product approvals and raw material sourcing, Ipca depends a lot on this particular unit, and the clearance for this unit would mean significant upside to your US business. More importantly, we had the Ratlam unit which was given certain exemptions from the US FDA during the COVID period. So, yes, US FDA had given some lenient approach towards this plant during COVID shortages, but let's see how this inspection shapes up, because valuation wise as well as stock wise, you could find this stock attractive, 20 times FY25 earnings, and upside is that if this plant gets cleared, then a lot of things could move as far as the US business is concerned for Ipca Laboratories.
Right, when it comes to Ipca Laboratories, even the valuations, as you mentioned, are looking attractive given the fact that it is cheaper than the likes of Mankind Pharma and Torrent Pharma.
Yeah.
And interesting fact is that both the foreign investors and domestic mutual funds had increased their stake in the counter in the quarter gone by. With that, let's shift focus to another stock that's on my radar today, this afternoon. It's BSE. Now, there has been a big setback coming in for BSE, given the fact that NSE in a circular has said that they will be shifting the Nifty Bank F&O contract expiry to Friday from Thursday. Now, why is this a setback for BSE? Now, BSE had relaunched its F&O contracts both weekly and monthly with reduced lot sizes and with Friday as expiry day, because it didn't want the expiry day to clash with NSE, because it would have impacted their volumes. So, since the time they did that, they had seen an increase in their derivatives contracts turnover. Right, in 3 weeks they saw 60,000 crores coming in. But now with Nifty Bank, which is the most widely traded options, shifting to Friday, it could have an impact on the volumes that will be traded on Sensex and BankX futures. So that is something that comes as a setback for BSE, and which is why the stock was down somewhere around 3% in today's session. Concerns will be now that the volumes will now shift to Nifty Bank when it comes to the derivative segment. So even though it contended that it's not looking to come as a competitor to NSE, it just wanted to contribute to the ecosystem. But NSE really hasn't taken it that way, and they have come out and made this move which could hamper BSE's volumes going forward.
Absolutely, and that could be a concern for the BSE stock price moving ahead. But real estate, that was already one sector which has been in focus for the past few trading sessions. In fact, if you look at the real estate index, that has given very strong returns year to date. If you talk about Sunteck Realty, that is one stock which Jefferies likes. They have a buy rating on this one with a target price of 415. Obviously, they have trimmed the target, but the key here is that the pre-sales, especially in the affordable segment, have been good for Sunteck Realty. If you look at the overall growth pipeline, it looks like for the next few years, they will be steadily growing over 20%. And also, if you look at the cash flow generation, that is also going to be quite good in the coming quarters as the company monetizes its large real estate. Obviously, according to Jefferies, the valuations being attractive are still at a 50% discount to the net asset value. Given the fact that companies usually trade 70 to 80% to the NAV in the mid-cap space, there could be some upside to the stock, and that is why Jefferies has a buy rating. As I said earlier, the target price kept by Jefferies on this stock, Sunteck Realty, is 415.
Right, Yatin, but when it comes to Suntech Realty, the return ratios I think haven't been all that great. And if you compare it with the sector PE, I think it's a tad expensive if you look at players like DLF and those other
on
stocks
P
in
basis
the
maybe Nandita, but if you have to look at real estate companies also from the NAV perspective, which Jeffries believes is quite attractive for Suntech.
Well, with that, I think we are done with the stock picks that we had on our radar this afternoon. But it's a wrap from me and Yatin. Thanks a lot for watching. We'll be back with the markets at 8:30 a.m. tomorrow, so don't forget to tune in. But for all your other news and updates, keep following Money Control.